helicopter. Here we are live, Apple Computer. The time is 12:22 p.m. We took a nice short, I'm being told by seniors over there, as far as MMTs, shorting this down move going into the earnings season. You can see this nice drop, this nice $2 short right there. We're just going to keep this video very brief and short for the MMTs because we wanted to let you see how that collapse is happening right there. It's happening quite a few of them. We'll be doing a lot of earnings preview. We just want you to see that they're doing that sell down on Apple Computer, and they're going to report their earnings after the close. One of the things that people are going to be looking at is the impact from Japan will be another point of interest for Apple. While Japan only makes up about 6% of the total revenue, it relies on the country's supply chain for its gadgets, in particular the touchscreen. While Apple has been rumored to have been sourcing other manufacturers to circumvent temporarily supply constraints from this Japan area. So, you know, past quarters, Apple's consistently topped quarterly expectations for years. The reaction, however, has been mixed with little consistency. Last quarter, for example, Apple posted a best quarter, a beat and a rise, while it opened following the session $8 higher. It ultimately closed $2 lower. So they slid the bid in the last earnings. We can see that unit sales, Apple's recent lawsuits against Samsung may have taken a little bit of suspense out of the company's numbers this quarter. The suit suggests the company sold 18 million iPhones and 4.2 million iPads in Q2, which I guess isn't all that bad. Nonetheless, the street is currently estimating 3.6 million Mac shipments in Q2, 16.5 million iPhones, and 6.2 million iPads. Guidance: Apple management will likely offer its typical conservative guidance. However, the company's ability to meet demand in light of constraints in the supply chain may result in a more conservative guidance. All right, the analyst coverage, you've got Rodman out there. He thinks it's going to guide $22 billion and $490 by a wide margin, $2 billion plus and $1 respectively. Just remember what they did to Google on their great earnings on revenues. So basically, note that the Apple options expire tomorrow, April 21st. That's the weeklies. So we're gonna go through some of those options in a different video naturally, and Brian Plank can learn to pair these videos together so that they're in sequential order for MMTs on the home side. SMF analyst coverage, like I said, they're all about the same distance and the same public model that they use. The actual volatility, though, as a real trader, is where the money's made. That's what we do. That's what we'll be doing in after hours. That's what we always do. We do it live, though. And basically, that short right down to that bottom that you're looking on that video right there, live right now, that was a great MMT short. And that's called walking that dog all the way down. That's part of the price action volatility. So those are just some of the highlights of Apple. The street expects a Q2 EPS to grow about 61% year over year to 5.37, and revenues to grow at 73% to 23.38 billion. Okay, so that's kind of like what the street estimates are, and we'll see how the street will act. We could care less. If it goes up, we go up with it. If it goes down, we short it down just like we are now. Doesn't matter to us. So those are just some of the highlights. And here's a 3-minute bar, and that's why you're covering at the bottom, because you don't want it to you don't want to lose your short spread. So now we got a long spread. When this breaks up above that bar, that's where we look at getting that long. So we're cashing in here and getting long here. We already made the money there. Now you got to get that debit up. So let's see how far they want to go short covering into it. We're using the platform here. This is how it works in earnings. There's the print. 342.91 by 342.91. Remember, the high was 345.75. We will see, and we will take it whatever way it wants to go. When it wants to go this way, we take it. When it wants to go this way, we take it. Doesn't matter to us. We don't have an opinion about the earnings ourselves. We could care less. The only thing that we care about is a directional price action movement and making a market between that public reaction and after hours. And we'll be there. That's your earnings preview.